which are there major. So, but even specific impact, I would be more concerned with about certain other provisions which are being actually, designed and which are going to be implemented. So the first compromise is exclusion of the petroleum products for the time being, which will not be subjected to GST till the date GST Council decides, which can have a telling impact on the ferrous or non-ferrous metal industry, which is the largest consumer, one of the largest consumers of the diesel, etc. Telecom industry, second largest consumer of diesel in the country after railways. Since petroleum products, natural gas, crude, petrol, diesel, and aviation turbine fuel are continued to be levied with the excise and VAT, plus all type of taxes which state government think of in the middle of the night, and which the credit of which will not be available to the user industry, the cascading effect will remain. State government wanted this to be out from the GST altogether, because that actually forms the bulk of their revenue, almost 35%. They didn't want to leave actually this cash cow for them. The actual exclusion is only of alcoholic beverages for human consumption. That is constitutionally kept out the GST regime. The Article 269 12A introduced, which defines goods and services tax under Constitution as goods and services tax means any tax which is to be imposed on the supply of goods or services or both, except alcoholic beverages for human consumption. That is the all beer, vodka, wine and everything, IMFL. So that is complete, so it will be continuing to be subjected to state excise and VAT. In the same manner it is now. We wouldn't be much worried about this. Some people might be concerned with that, but most of we wouldn't be worried about that. And even the person who is enjoying this also wouldn't be worried about this, because once he leaves the pub or bar, he wouldn't be knowing whether the pub owner is charging him income tax or octroi or LBT. So that is besides the point. The other important feature is I talked about CGST and SGST. At the same time, integrated GST, which will be levied on the interstate supply of goods or services, that IGST, it is a constitutional deeming fiction introduced that all import of goods, supply of all goods or services from outside India will be deemed to be interstate supply. Any goods imported from outside India, any services availed from outside India will be deemed to be interstate supply of goods or services. CVD and SAD will be replaced by IGST. So there will be integrated GST which would be levied on the supply of goods and services which is obtained by a taxpayer in India from outside India under goods, obviously at the customs gate, basic custom duty plus IGST, and services under reverse charge. We are already under reverse charge at present as far as the import of services are concerned. Similarly, in GST also, reverse charge will continue. And that brings us, why it happens? GST is a destination-based consumption tax against a origin-based tax like CST. Even service tax today is also a origin-based tax. We have place of provision of supply of services, POPs are, right? Place of provision of services rules, 2012. If you see, they are all more or less based on the destination principle. But since service tax is a central levy, which I mentioned in the beginning itself, the destination principles and the supply rules have no role to play, because I need not determine where I am situated today and where my customer or place of supply today. If a stockbroker is situated in Mumbai, even if his customer is situated anywhere in the country, he charges service tax at the uniform rate in the bill. So that to that extent, in the domestic transactions, these place of supply rules have no role to play in the current service tax regime. This aspect will completely change in GST, because GST is a destination-based tax. So for example, today from a Maharashtra dealer supplying the goods to Gujarat, charging 2% CST against C form, the income accrues to the state of Maharashtra, 2% CST. The very transaction in the same manner if undertaken, when undertaken under GST, the entire income in the form of IGST will accrue to Gujarat. Transaction is the same, but income will go to Gujarat. Because it is a destination-based consumption tax, therefore it is essential to determine the place of the destination or the place of consumption, because it is that place where the taxing jurisdiction will come into play, and we will have to decide whether it is an intrastate transaction or whether it is an interstate transaction, which is crucial in the context of destination-based consumption tax. And with these, so two features coming forward. One is destination-based consumption tax, another the basic core feature, and that is value addition. And in this context, the VAT or GST has been defined as that value-added tax is a destination-based consumption tax which is levied on value added at each stage of the economic chain of supply, starting from production till covering entire distribution chain till the final consumption. And all the people who are situated in this economic chain of supply merely act as a tax pass-through, and the tax finally sticks to the final consumption. This is the essential core feature of it. The impact is all B2B and B2C transactions are covered under the GST. Nothing is left. All B2B transactions and all B2C transactions will be covered under GST. But everybody will be, and why this is the feature? As I again said in the beginning, that all consumption, all indirect tax being consumption tax, including GST or VAT, which is to be levied, the primary aim of the VAT or GST is to impose the tax on the household consumption taking place in the country. And the aim is to relieve the businesses of the tax burden. It is to be levied only on the household consumption. Businesses should not suffer the burden of the tax. That is the core philosophy of VAT or GST. And that is to be ensured through the credit mechanism, whereby they simply pay the tax only on value addition, and that also they pass on to the ultimate next buyer of the day, who is engaged into the business activity. Since the ultimate consumer is not engaged into the business activity, the tax stops there, and he finally bears the burden. So the provision store or the medical situated at the corner of the gully, who is a retailer store, selling the product to the biscuit, Cadbury or medicines, right? He will also supposed to charge GST or VAT to the customer coming to his counter. And there, the burden stops. However, in the present scenario, the customer doesn't know, first of all, how many taxes are actually loaded into the price. One, and he is also paying the taxes in one way or another, which are levied on the taxes at the earlier stages, because of the cascading effect. In GST, the tax will be recovered from him, but in the previous stages, it will be only on a value addition. To that extent, it can lead to the reasonable pricing of the product or services, which is not ensured in the current scenario, in the current regime. So, this destination-based consumption tax, and the other impact of this will be, with the coverage of all B2B and B2C transactions, because of that, what will happen is the revenue is expected to surpass the wildest imagination of the government. And that has happened. That has happened. In fact, sometimes I feel amused when we talk about the loss on account of the GST by the states. If on one side we are talking about an increase in the GDP to the extent of about almost 2%, and now with the latest projection coming to 4.5%, 6.5 lakh crore increase in the GDP in the monetary terms, where is the question of loss of revenue for the states? Is it a eyewash? Appears to be so. Just to another reason to levy compensation cess. So, where is the question of? But then it has always surpassed. With the swelling coffers of the government, in the coming years, one can expect a reduction in the income tax rates. In fact, Netherlands, Sweden, New Zealand, and such countries have introduced GST with a primary aim to reduce the rates of income tax. World over, there is a change shifting in the policy of the government who have to collect the revenue to carry on with their welfare policies. And that revenue is collected in the form of direct tax and indirect tax. But world over, the emphasis is now being put on more on indirect tax rather than the direct tax. There's a clear shifting of this policy. And in GST regime, because with the all B2B transaction and B2C transactions coming under the GST fold, the parallel economy or the cash-driven sectors of the economy, you can call it cash-driven, unorganized, black market or whatever we want to do, are likely to come on records, which also are able to escape the income tax net because they are escaping the indirect tax net, which is levied at the inception of the transaction. Income tax comes after the closure of the transaction. They are likely to come up on the records. And with that, there could be a tremendous increase in the revenue, multiplier impact of that, as I call it, which would enable the government of the day to reduce the income tax rates also in the coming years. So this would be the overall impact. With this background, keeping this background in the mind, let us now get into the certain important aspects of this entire GST structure. I would be covering certain part of supply, registration, returns, input tax credit, the invoice matching provisions, reverse charge mechanism, transitional provision, whatever relevant are there, and mainly the place of supply in the context of stock broking, the current issues relating to the transaction charges, demat charges, recovery of that, plus whether centralized registration. These are the certain main features, because we are now at the stage where there is no need for me to go into any interpretational exercise whatsoever. I mainly try to cover mainly the operational or functional aspects of yours. What are the issues? What issues can still remain? I will be on that. So let us. And now, while I'm beginning, I know I just might be opening the Pandora's box. So, but maybe I'm absolutely helpless not to open that. So maybe on Pandora's box at the end of the session, something on Pandora's box. The first and important thing here is today the taxable event, for any levy of the tax, it is mandatory to have the taxable event. Today, what is the taxable event for excise? It is manufacture of the goods. For sale tax or VAT, it is the transfer of title in goods for a consideration. And for service tax, it is the provision of taxable service. These are the three taxable events laid down under the Excise Act, Central Excise Act 1944, Finance Act 1994, and VAT Act of 2005 and others of the state-wide laws. Overnight, GST, the taxable event will be the supply of goods or services or both. So, the terms of manufacturer's VAT or service, provision of service, with which we are so much accustomed to for all these years and decades, will all become the history. We will have to replace it by supply. We will have to understand ourselves as a supplier of the goods or services. And in GST, there is no distinction between a supplier, whether he is a manufacturer, whether he is a service provider, or whether he is a trader. All are at par. All are supplier. So from 1st July, all of us will have to consciously start thinking ourselves in the name of, as a supplier. We are supplier. And it is right that the supply has been termed as a taxable event under GST, because as there is an anonymous quote says that the government works on, as far as the tax collection, tax part is concerned, government always works on the principle of demand and supply. Government demands and we supply in the form of. So supply, and this supply is defined under Section 7 of the GST Act, CGST Act. We are now aware about that CGST Act, IGST Act, Compensation Act and UTGST Act have all been passed by Rajya Sabha. 12th April they have been enacted. The date of notifying it, that is the date of taking effect, will be notified soon. It can be 1st July or whatever it may be. So far it has not been notified. State GSTs are under consideration. They are likely to be mirror image of the each and CGST only with the grammatical correction. Telangana has already passed on Sunday 6th April in an emergency session. Telangana has become the first state to pass the state GST law, which is the mirror image of the CGST Act. So at least probably we can look forward to some sort of a uniformity of the state GST law, unlike the today's weight laws among the states. We can, but you never know. If we are dealing with more than one state, every state GST law, for once it will have to be gone through with the fine-tooth comb. Because what mischiefs they might have done as far as their state GST, particular state GST law, we never know that. So we cannot take it granted. We are only presuming, we are only hoping for it will be a mirror image of CGST. That is what. And with that, the stage will be paved for. So supply is defined, and supply has been defined in an inclusive form. Please keep it in mind. Supply includes all forms of supply, such as sale, disposal, license, rental, barter, exchange, leasing, all such other forms of supply for a consideration which are undertaken or agreed to be undertaken in the course or furtherance of business. So all forms of supply, this is an inclusive definition. So if something is left out, but if it has a connotation or characteristic of supply, it will still be covered. But it should be for a consideration. So free supply is out, subject to certain exceptions. Free supply is not part of the GST. Cannot be levied to GST. And third, should be in the course or furtherance of business. And so non-business activity, if there is any supply, subject to certain exception, it is not to be levied to GST. Now business itself has been defined in a very exhaustive manner, whereby whether it is for a pecuniary benefit or not, irrespective of volume, frequency, continuity or regularity of the transaction, it will still be considered as a GST, as a business. There is a long winding definition of business, whereby the Supreme Court ruling in the Ahmad Bakshi's case, that a business pre-notes is a term of indefinite import, but basically it is an activity, profession or vocation which is carried out with an intended pecuniary benefit. The business definition here says whether or not for pecuniary benefit. In a Raipur manufacturing company, Supreme Court says that it is the volume, frequency, continuity or regularity of the transactions along with the intended pecuniary benefit which determines whether the activity is a business or not. Here it says irrespective of the volume, frequency, regularity or continuity. So there is a dilution of all these principles, but again we will not go into that. This is just for that supply is so widely worded, business is so widely worded, that one has to be careful whether the particular transaction has a connotation of supply or not, particularly when there is a consideration involved. This one. The second, it says import of services for a consideration whether or not in the course or furtherance of business.